welcome to the Money Show, your one-stop destination for all your personal finance queries. I'm Kavita Thapliyal and we have lined up a power pack show for you today where we'll be talking about various aspects of financial planning and your financial portfolio. And we will also drop on the counter to get your mutual fund portfolio queries answered by our experts. But then before all of this, just in case you're watching the show live and want to send across your queries, you can do that via WhatsApping us. You can WhatsApp your question on 865-797-4571. You can also email us your queries on the moneyShow@etnow.tv. So before we begin, let's get you the top headlines of the hour first. Nifty recovers in the last hour of trade to end flat for the day, but broader markets outperform. Aditya Birla Fashion, Aditya Birla Capital both gain over 10% each. Aditya Birla Fashion to split its retail business into two by carving out Madura Fashion division into a separate listed entity. We decode if the move will unlock value. SEBI Chair Madhvi Puri Buch says Indian market is commanding a premium because of the world's faith in Indian story. She had earlier highlighted the froth building in small and mid-cap stocks. Aviation Ministry says it's monitoring the situation unfolding at Vistara. The airline is facing flight cancellations as pilots go on sick leave. Patanjali's Ramdev offer unconditional apology to Supreme Court in misleading advertisements case. Apex Court says all barriers were crossed by the company. Alright, so let's begin the show. And Infosys founder N.R. Narayan Murthy has gifted Infosys shares worth over rupees 240 crores to his 4-month-old grandson Ekagra Rohan Murthy. While other income gifts are subject to a tax under certain circumstances, but there are situations where gifts may be exempted from tax. Now, how gifts are currently taxed in the recipient's hand under Section 56 of the Income Tax Act, and what are the do's and don'ts that you as a gift giver should be keeping in mind, and one as a receiver should be careful about. Let's decode all of this. I have with me Arnav Pandya, founder Moneyeduschool. Arnav, good evening and welcome to the show. So clearly there are specific guidelines as per the income tax that if you are a relative, if a gift is coming through a relative, there is no income which will be taxed, but then there is a specific definition to it, and a specific definition for a person who can be claimed as a non-relative also. So let's just first get the basics right, and let's just understand as per the income tax rule who is defined as a relative and who is a non-relative.
So just to make things very clear, under the Income Tax Act, when a gift is given by a person to someone else, the gift is taxed in the hands of the receiver subject to certain conditions. So that is the first thing. Second thing is that the amount of the gift or the value of the gift also is very important, because there is a barrier in terms of 50,000 rupees per year. So if the value is less than 50,000, then there is no tax, which is, or rather there is no income which will be considered as taxable, while gifts of value of above 50,000 are the ones which are liable to be taxed under circumstances. So then we come to the third point, which is that if a gift is received from a relative, then this fulfills one of the conditions which exempts the amount from being taxed. So any amount received from a relative, even if it is above 50,000, would not be taxed in the hands of the recipient. Now that we have established the fact that gifts received from a relative are not taxable, let us look at what is the definition of a relative. So the definition which is given under Section 56 is very, very clear in terms of who is a relative. So for example, for a person, their spouse would be considered as a relative. Similarly, their brothers and their sisters along with their spouses. So the brother and the brother's wife. Similarly, the sister and the sister's husband would also be considered as a relative. Then any lineal ascendant or descendant, which means that, for example, uh, if you receive a gift from your father or your grandfather, that also would be considered as being a relative. So that would not be taxed. Then you go on to the other definitions, which are that if you receive your gift from your father's brother or sister, which means that if you receive a gift from your kaka or your foi and their spouses, which means that kaka or kaki and foi and fua, so that also would not be taxed as those are relatives. Similarly, on your mother's side, if you receive your a gift from your masi and masi spouse, which is a masa, or your mama and or mami, that also would be considered as being received from a relative and not taxable. Another inclusion under the definition of a relative is also that if you receive a gift from, say, your father-in-law and mother-in-law, similarly, your grandfather-in-law and grandmother-in-law, that also would not be taxable. Any person who falls outside this definition and who gives you an amount more than 50,000, that amount would be taxed in the hands of the recipient.
So now it's clear that gifts from non-relatives are taxed if the aggregated value exceeds 50,000 annually. But then, Arnav, we're also looking at different types of gifts. Okay, we are talking about money as gift. We're talking about immovable properties or assets kind of gifts also. Do we have a separate taxation for all of this, or when we talk about aggregated value of 50,000 annually, includes all such type of gifts?
No, it will include all such type of gifts. The only thing is that you need to ensure that the valuation of these are done properly. So because, I mean, when you give cash, it's very clear as to what is the amount involved. If it's, say, shares, you will have to value it as per the, if it's a listed company, as per the market value. If it's a property, then you have to look at the stamp duty value, which is there. So the aggregate of these amounts during the year would have to be considered. There is no separate limit for each of these items.
When we are talking about gifting, we cannot miss out gold. Is gifting gold also taxed from a non-relative?
Yes. So gold is also included. So, I mean, you have to look at it this way, that cash, movable property. So movable property in this case would consider everything which is there, which is shares, bonds, all of those, plus immovable property. So gold will also be covered if it is gifted. And only thing is that one has to remember that there is also another condition which is there for exemption of these gifts. So apart from being received from a relative, if you get any gifts at the time of your wedding, that is also exempt. So, for example, there is a difference in terms of when you receive gold. So, gold received, for example, at the time of a wedding, that is your own wedding and you are the recipient, then that would be exempt. But if that is received during any other point of time, then if it is received from a non-relative, then you will have to do the valuation part and see what is the amount, and that would be considered as income. Similarly, there are also a couple of other exemptions which are there. So if you receive amount under, say, under a will or as inheritance, that also would not be taxable. So that is another example where an individual can benefit, because any amount received through that process which comes down from the family, that also is not, I mean, that also is not taxable.
So now let's also understand how are you taxed for someone who's giving the gift and someone who's receiving the gift.
Yeah, so for example, I mean, if you're giving the gift, that is not a problem because there is no tax on the giver of the gift. It is only the recipient who has to consider the value. So if, for example, if you are receiving an amount from a relative, then there is no amount which you have to add to your income. But say you get 5 lakhs from a non-relative, that amount which you receive has to be added to your income under the head of income from other sources, and then based on what slab you fall under, you will have to pay tax on that particular amount. So the point is very clear. At the time of receipt, you have to include it in the income of that particular financial year and then give it for taxation. So if it's pure just cash amounts, then that cash amount has to be included. If, for example, it is something like, say, shares, then one also has to look at the fact that what will be the future taxability, because if there is an investment which is giving rise to income, so for example, say you get shares during the year, and then during the financial year, the shares also declare a dividend. So that dividend would also be taxed in your hands because that becomes the income of the recipient. So one has to keep that in mind. In case of shares, the capital gain will arise only if you sell the shares.
Now let's also talk about specific occasion, like for example a wedding or a childbirth. You know, you get a lot of you get a lot of gifts and you get a lot of different type of gifts. How can you just maintain an account of what are the kind of gifts that you're getting from what kind of a relative, and how should you be paying up tax for it?
So in the case of a wedding, it is very simple that you have to maintain those records as to what was received at the time of the wedding. And since that is exempt, so there is also clarity in terms of that there will be no tax impact at this point of time. Now, in case you are getting an amount, say, in the name of a child, then the two things happen. One is that where is that amount, for example, say it's received in cash, where is it deposited? Because if it is received from, say, a relative, then there is no question of any taxation. And that is what usually happens in Indian families, that a newborn child or also on their birthdays and all, the family members give some amounts. But say it is received from someone else, then obviously the child is not filing an income tax return on their own till they are a minor. But a child's income, if it arises, that is clubbed with the income of the higher earning parent, and then it is taxed. So that also has to be taken into consideration, because say, for example, there are shares which are given in the name of the child, and then say dividend arises on it. Now that dividend becomes the income of the child, but since there is the child is not filing a return, that dividend income will be clubbed with that of the parent, and there is a minor amount of 1,500 which is allowed as a deduction, and the rest will be taxed in the hands of the parent. So that factor has to be considered, that the child, who is giving the gift to the child, and secondary point is that if it's an investment or if it is invested, then the amount which arises from it, that has to be clubbed with that of the parent.
All right, a lot of aspects to gift tax, and thank you so much, Arnav, for being on the show and helping our viewers understand all the nitty-gritties involved in it. Thank you. Time for a quick break, and then post that, let's get your queries answered. And just in case you're watching the show live and want to send across your questions, you can do that on our WhatsApp number and email ID. After the break, we'll be joined by Abhijit Choksey, who will be answering your questions live.